Thank you. Good afternoon. My name is Abdullah Verachia. I'm a member of faculty here at GIBS, and it gives me great pleasure this morning to welcome Professor Adrian Saville. Adrian is a colleague at GIBS, also a member of faculty, but Adrian is also the Chief Executive Officer of Cannon Asset Managers. And so the objective of this LinkedIn Live session is for us to have an interactive conversation with Professor Adrian Saville, getting some of his views and also to get some of your views. And so I'll track all of your conversations and really try and bring you into the conversation. It's interesting because we're in new territory in terms of conversations like this here using online platforms. And the objective is really to have an open conversation in terms of the economic and business impact of Covid-19. And so Adrian, I had a conversation with my wife last night. I said it almost feels surreal. It feels like I'm in a dream. I've got to pinch myself and wake up to this. I think none of us foresaw the speed, the acceleration, and the local impact post the announcement by President Cyril Ramaphosa on Sunday evening. What are some of your opening thoughts in terms of the last few weeks and very specifically the impact of COVID on our various economies around the world?
Thanks, Abdullah. I mean, it's great to do this session with you. I think your word surreal is very apt. It does seem very sort of dislocated, disconnected. How did we get here? And that when we were, watching events unfold, initially in China, it was, oh, well, that happens there, it doesn't happen here. And then it was Italy, and it was, well, look how, they've mismanaged the circumstance to land up in a bad patch. COVID travels quickly, and it has managed to get from China to Europe to South Africa in a short space of time, what we would call a network effect. And this is a particularly powerful network because of the speed with which this accelerates. Impacts on markets are probably, my default position is to think about what does this mean for investors. I've been managing money since the late 1980s, which is a long time back. Some people in the classroom will say, well, I wasn't born then. Well, I was. And my first experience of this type of crisis was 1987. When followers of the market will recall or have read that was when the Dow Jones fell 20% in a day. From then to now, we haven't had anything as spectacular. Asian crisis, Russian crisis, Y2K, Twin Towers, global financial crisis, none of them comes close to the speed and extent of this sell-off. To give you some sort of things to measure this by, it's unusual for a market to move 4% in a day, very unusual. We've had 6 days in a row of 4% up or down. And if you look over the past 140 years, for which we've got robust data on US markets, we find the 20 biggest declines over those 140 years. 3 of those 20 days happen in the last 10 days. Wow. So this is a wild, it's a wild ride, and depending on which day we're talking about, it might not only be a wild ride, it's a horror show.
So you speak about this horror show quite significantly, and the fact that we're in new territory. Yeah. And one of the things we speak about, you've spoken about this network effect and the speed and acceleration of this network effect. We are a lot more interconnected as a global economy than what we were perhaps in 1987, perhaps in 1917, that people often reference in terms of a plague, etc. Yeah. The difference this time around is the interconnectedness, the fact that we increasingly globalized as an economy. And what happens in the morning in Asia, or what happens in the late evening in the US, has a direct impact in terms of us as South Africa. How do you manage some of that uncertainty and volatility in the market, given where we are?
I think you have to accept it as one of the circumstances of global connectedness. That doesn't mean you can't manage it, but I think you have to accept it as a sort of as a point of departure. Sure. There's some really interesting stuff done on network effects, and if you go back to the plagues of 100 and 200 years ago, it would take those diseases not it would take, in a day, those diseases could travel 1 or 2 kilometers
Sure.
per day. Now they travel 1 or 2 kilometers in a matter of minutes.
Sure.
And they can get intercontinental in the space of a day. So this connectedness is, I think, one of the things that has translated into the particularly pronounced or profound effect of COVID. And if we're trying to understand why COVID, itself, why COVID, why not something else?
Sure.
And there's a couple of possible explanations here. The one is that markets were looking for a reason.
Okay.
And it could have been something else. And I'm not entirely convinced by that. I think it's fair to suggest that for some markets, in particular the US equity market, was
Sure.
looking very heated. But Asia, Europe, certainly South Africa, it would be hard to describe them as expensive at the beginning of this year. The US, different story, and it is in many ways the US that has led the way in terms of sell-off, because that's where the anxiety has really
Sure.
sort of made itself most felt. Another aspect of this connectedness that you're referring to, so we get the financial contagion, but it was really the economic contagion that led before the financial contagion, and what I mean by that is industrial supply chains.
Yeah.
Go back to mid-February and the industrial supply chains were, it's Chinese Lunar New Year, it's shut down, everything's quiet. And then the factories didn't come back.
Yeah.
And I remember posting a month back, there might be some supply chain problems in iPhones.
Right.
And a couple of car components. And then, that seemed like a quirky post at the time. Oh, isn't this interesting?
Sure.
And we fast forward 4 weeks and Scandinavian Air lays off 90% of its workforce this last weekend.
Sure.
That's the industrial supply chain and the contagion and the speed with which this has spread and proliferated. The economic impacts are even more real than the financial impacts. It's that the economic impacts are harder to see because we're not having them priced daily.
Yeah.
So the drama is in, look at the financial sell-off. I think the real story here is the economic impacts.
So that's what worries me significantly, right? I think for 3 or 4 reasons. One, I think there's a vulnerability in sub-Saharan Africa, given on our dependence on Sino-African relations, given our dependence on commodity markets, given some of the challenges in the healthcare environment, and the fact that we might not have as sophisticated healthcare environments across emerging markets, many of them in sub-Saharan Africa. And very importantly, as you've rightly said, the fact that there's often, in this case, even a shorter term, but there's still a lag effect between the daily movements in the financial markets versus the business impact. And so how do you foresee that playing out? I mean, the more deeper business impact, especially in companies in the manufacturing environment, in the retail environment, in the auto sector?
Well, there's some industries where social distancing, so you spoke about how do we manage this? You mentioned that earlier, and social distancing, what has now been hashtagged as flatten the curve.
Sure.
That is, I think, statistically, the most sensible way to manage this from a policy perspective is you flatten the curve. The impact is stretched out, and that allows healthcare systems to cope. It allows businesses to cope. But in order to flatten the curve, you have to impose high social distance, quarantining, travel bans, and so on. There's some industries, to get to your question or observation, there are some industries in which this is just impossible.
Yep.
You can't socially distance in a manufacturing plant. You could run shifts alongside each other. You could divide a shift into 2. You can't social distance the mining industry. So there's some industries in which this is purely academic. Social distancing isn't an option, and that means you either need to run the risk then of contagion, or you need to shut down. And we've already got some shutdowns going on in the industry, in the mining industry, sorry. The part of the economy that I worry about much more, though, than the headline, Scandinavian Air or Disney shutting their theme parks,
Sure.
is mid and small sized businesses where their ability to absorb shocks is far less than your large,
Sure.
listed, highly diversified, strong balance sheet business. It's those businesses, and those businesses are particularly vulnerable in this environment.
So let's touch on that, right? We live in a South African environment which has really gone through anemic economic growth in the last 3 to 5 years. The possibility of a further ratings downgrade by Moody's looming on us. A very challenging budget by Minister Tito Mboweni.
I mean, that all now seems to be, ratings agency is like very yesterday.
100%. But they still sit at the underbelly in terms of some of the contextual challenges, right?
Absolutely.
Now it's further compounded by some very tough decisions that the President had to take on Sunday that will impact small and medium businesses, that will impact the viability in terms of the liquidity of businesses, the viability in terms of them being able to grow, them being able to survive even in slow economic growth environments. How do they navigate some of this complexity, especially small and medium businesses? I see challenges in terms of managing short-term liquidity, challenges in terms of perhaps looking at their workforce and providing environments where they can work off-site. But this is all new territory, right?
I mean, you're learning to fly, having been thrown into the air.
Yeah.
And my concern, my anxiety, we were speaking before we started broadcasting here, is, and I know that we share this anxiety, is that there are some businesses that just won't survive this. That the shock is already in an anemic economic environment where balance sheets have been pushed quite hard, household debt is high, currency is moving all over the place, and you've got the ratings agency, uncertainty. This is just, one push too far.
Yeah.
So, as with every other crisis or any other crisis, there will be casualties here.
Right.
And given our economic circumstance, that is incredibly worrying, particularly that it is more likely to be mid and small sized businesses that take the brunt of this.
So Adrian, I want to go to some of our viewers and really some questions that you've put forward on the live link that we have. Francois Nell speaks about, or asks the question, what will the effect of COVID-19 be on global and specifically African equality? What are some of your thoughts on that?
Thanks, Francois. So equality is already, inequality is already stretched, especially in South Africa. It's hard to see how this doesn't aggravate that inequality. Globally, so perhaps globally is easier than locally first. Sure. And globally, the policy responses have been quick and direct.
Right.
I mean, we've seen the Fed in the space of a couple of days cut 1.5% off US interest rates, put 700 billion in liquidity into the system. That is going to help, in particular, the financial components of the engine.
Right.
What concerns me in looking at the global policy response is there's been very little done on the fiscal side.
Yeah.
So they're moving around interest rates and money supply. That's going to help the banking system, the credit system, capital markets, stock markets, bond markets. What it's not going to help is the coffee shop owner.
Sure.
And that's the fiscal response that's missing in this. How big does the fiscal response need to be? The lesson from previous crises is you need a fiscal stimulus of at least 2% of GDP.
Wow.
The extent of the stimulus so far, 0.5%.
Yeah.
So I think taking the global policy responses as a guide, this aggravates inequality. It doesn't moderate it.
So if you juxtapose what you've said, I mean, some Scandinavian countries have put a fiscal response to try and assist small and medium businesses. They put some measures in place. but they've got latitude within the government fiscus to be able to do that. We've got a challenged environment in terms of limited budget capability, the added complexity of how we deal with COVID-19 in terms of budget restrictions. Do you think our government has some latitude, some wiggle way, or nothing at all, right?
Just take the budget that was read a few weeks back.
Sure.
And think of our collective response to the budget was, well, where's the money going to come from?
Yeah.
And the money was going to come from wage cuts. That was the proposal, is we're going to cut salary bills in the public sector.
Right.
And that gives you a sense of we're fighting with one hand behind our back. We were talking about a budget deficit of 6% debt to GDP. We don't have money. We don't have ammo. We've got state-owned enterprises that are sort of patting their pockets. Sure. We're out of money. The fiscus is patting their pockets. They're out of money. So if you could think of, it's hard to think in the last 10 years of a worse time for COVID to strike South Africa than now. The timing is absolutely imperfect.
And the resultant impact of businesses going under, small and medium-sized businesses unable to weather some of the storm, will have that network effect again in terms of reduced contribution towards taxation from a fiscus perspective,
sure,
which starts to spiral even further, right?
So I think that there's, you mentioned earlier, what can companies do, and here is a opportunity for the collective, because this is not a job just for government.
Right.
And the UK, perhaps South Korea also, I think are good examples in leading the way in this, in sensitizing businesses to thinking about other ways in managing cash flow, IOUs.
Right.
That if you owe me money, if I owe money on, is there some way that we can accommodate ourselves? The alternative is I go into business rescue, they don't get paid.
Sure.
And so the domino effect, or the contagion, which is suddenly a very, very poor term in this circumstance. Under global financial crisis, it was mistrust of the financial sector.
Right.
Now we've got mistrust or distrust of each other. Where have you flown from?
We just had a very interesting conversation downstairs with a colleague, right? On exactly that, right?
Yeah.
So on this issue of opportunity, Tebogo Leopeng asks the question, he says it's exciting times. His view is that in every crisis lies some great opportunities.
Indeed.
Where do you see some of these opportunities?
So I think, we need to be very careful about being gleeful, in this circumstance.
Right.
But absolutely, every crisis creates an opportunity, and the way I'm hearing the question is that it's investment opportunity, but I think that there is an opportunity here for reconfiguration in lots of forms.
Right.
Thinking about our risks, our vulnerabilities, our social cohesion, the importance of the collective over the individual. I think that there are many opportunities, that this is multifaceted in that way.
Sure.
From an investment perspective, from a market perspective, the opportunities are extraordinary. You've got established property businesses trading at 50 cents in the rand. You've got large listed insurance companies, and there will be claims on those insurance companies, but they're trading at 50% of embedded value. The big banks are on low price earnings multiples with very elevated dividend yields. The high quality banks are going to battle to hang on to those earnings, but the balance sheets are strong. South African banks are well capitalized, and perhaps that's the point, is to recognize that this isn't about, I don't think that this is about going and buying companies because you imagine that the price has collapsed relative to trailing earnings.
Right.
The first question, your point earlier, is how strong is the balance sheet?
Sure.
Is this business going to navigate the circumstance, and then if the balance sheet is sufficiently strong, is there a robust business here? So a case in point would be Saville, having moved from a 400 billion market cap to a 20 billion market cap.
Sure.
It begs the question, well, a 20 billion, with the share price having fallen from 500 Rand to 30 Rand, surely, it's an opportunity at 30 Rand. Risk first.
Right. So Paul Tabane asks the question, and Sibusiswe asks the question as well, what do we do with, in his words, government minimizing price gouging and really, where businesses start to enhance profits at the risk of some of the social implications?
Sure. Yeah. So, where could you get price gouging? Face masks.
Yeah.
Hand sanitizer. You can get price gouging. And there may well be some businesses that use this opportunity to do exactly that, to profit at the expense of society. Remember that this time will change, this time will pass, and if you are using this as an opportunity to price gouge, you'll be remembered for this. This is the role of ethics and morality in business. They will be called out, and I'm going to judge that they should be called out if that practice is happening.
So on that, one of the questions that's come through here is what do we mean by social distancing?
Okay.
So I don't know if you've got a view on that.
Can you do that? Because that's not my area of sort of expertise in business, but social distancing. So I'll put the statistics or the economics into it.
Yep.
Social distancing is what they call flattening the curve.
Right.
And it's about reducing the chance of transmission. And how do you reduce the chance of transmission? Low physical contact, and ideally no physical contact. So even the elbow bump is, I hope no one does but even the elbow bump that's physical contact.
Sure.
There's a chance of transmission. We've come into close facial proximity. So what we've done in our business is we have no business travel for the immediate future, and unhelpfully, I don't know how long the immediate future is, but no business travel. We have replaced all physical meetings with digital meetings.
Right.
And no crowding. So no place where we're going to have a big venue with lots of people. Try and stay away from places where you're likely to get transmission. Lots of hand sanitizer and just sensible hygiene. So
you raised this question around the shift in terms of travel, which has an impact in terms of the airline industry, the hospitality industry, the hotel industry, the food and beverage industry. You raised the fact around reducing the amount of large ticket events, which has an impact in terms of the tourism industry, conferencing, events, logistics, etc.
I think of hospitality businesses.
So, 100%. So the question that comes through here from one of the people who've signed in is do you think that will change the way human beings interact long term? Or do you think we'll revert back to going back to that type of human interaction?
That's such a cool question. I was actually thinking that on the way here is one of my pet hates is the 1 hour meeting. Somehow meetings are all an hour and they make your way into your diary. And if you do 4 or 5 of those in a day, suddenly the day is gone.
Right.
Digital meetings, virtual meetings, reduce travel.
Right.
They are far more efficient. That we're not going to sit and talk, nonsense online for an hour, like how the kids and how. Ideally that reduces. No, not ideally. I don't know why I said that. That reduces community.
Right.
Which is not. That's where the word comes from. It's not ideal for social cohesion. Before you and I have a meeting, we first talk about where have you been, how's business, how's your wife, how are the kids, what's going on, and then that's social cohesion. So digital virtual meetings reduce social cohesion.
Right.
At the same time, they reduce emissions. They
Sure.
improve efficiency. They can bolster productivity. So perhaps there is sort of some contributor here or some influencer here that this will change the way we do business if enough of us get into changing our habits. And Tim Harford has done some really interesting work on when there was the underground shutdown in the UK.
Right.
And people were forced to change their travel routes because of the underground shutdown. What their changed travel routes did was it built brand new networks for them.
Right.
So, rather than this being a loss maybe there's an opportunity in that it forces us into new ways of doing things.
So do you foresee the possibility that we might get into new, because one of the questions that comes up here from Frank Oswani, who's a former MBA student of ours and a great colleague, he asks the question, what are some of the opportunities that you see emerging? So I mean, he speaks about health social enterprises, plugging into health system gaps, opportunities for those who are particularly good at taking some of these interactions online. We've seen the pervasive influence of Zoom. Google announced today that they will provide premium access to Google Hangouts until the end of July.
Yeah.
So a lot of those type of opportunities emerging. Where do you see some of that playing out for SMEs?
So the Google response is the exact opposite. To Frank's point, is the exact opposite about gouging. It's about, we see this as a crisis and we're going to join you in helping resolve or diminish this crisis.
Right.
Their response. And I would venture that that's one opportunity in any crisis, is to pull people closer and to get this sense of common purpose.
Right.
And you can do that with high social distance. The other thing that a crisis does, to your point, Frank, is that I think it lays bare some of the glaring gaps.
Right.
Well, one of the thoughts, Frank makes the point about healthcare, I'd make this point. The schools that shut down tomorrow, you know that there are 9 million children on the school feeding scheme.
Wow.
What happens to their meals tomorrow?
Yeah.
And for many children, this is a key source. So perhaps that can help sensitize South Africans to these things that happen, and the South Africans on this conference are the South Africans that sort of generally are in a position of privilege.
Yep.
Or better off. The 9 million children on the school feeding scheme are probably not on this LinkedIn conference.
Sure.
So, what can we do as a community to make sure that this crisis galvanizes us to fix this?
So it's exactly what Sean Turk asks here. He speaks about the fact that perhaps a crisis like this, as you rightly said, galvanizes government, business, civil society, key actors in society to come together to look at some of the societal systemic challenges that we have, to engage more with empathy, to understand the context of others, and to really look at new modalities in how we can work together and engage differently. Which is so important. There's the last two questions I perhaps want to end with. The one is by Imelda, and she speaks about the panic buying that we've seen in the last day or two. I think yesterday was particularly difficult in terms of the number of people that went into the retail environment. Panic buying started stepping in. Do you foresee the possibility that this will impact, the question she asked, will it impact supply chain coming in and supplying the retail environment?
Yeah. So, it's funny that you say panic buying. I'm thinking like, where's the panic buying? I'm seeing panic selling on markets. But I get the question now. It's about the toilet rolls and bread.
Yep.
This is crowd behavior at its very worst. Panic buying is about me first. It's about, I'm going to make sure I'm okay, and everyone else must sort themselves out. Panic buying is what feeds crisis.
Right.
Now, we're human, so we panic. And I see the exact opposite on capital markets. I see panic selling. And I could make the same argument. Panic selling isn't going to help you.
Sure.
The throwaway in investment markets is if you're panicking, it's too late. There are risks that are brought about by this to supply chain, and this is where I hope I'm making the point with sufficient force, is that this is about the collective. And it's about the collective of community, it's about the collective of the private and public sector. And whether it is panic in healthcare, panic in access to food, that panicking isn't going to fix the problem.
Sure.
It's cohesion and level-headedness that's going to fix the problem. And that's where Cyril Ramaphosa's pronouncement on Sunday night demonstrated clear, level-headed leadership. It was a firm, strong, bold, and in many places unpopular decision. But it was clear, it was firm, it was, this is what we're going to do. In times of panic and crisis, that's what you need.
Lovely. I think, Adrian, I want to thank you for your time, for your valued contributions.
Thanks, Abdullah.
And really thank all of you for participating in the session with us, for the valued questions. I think the commitment from us as a business school is we'll have regular engagements like this here. Because I think, rightly to your point, Adrian, we've got to really come together and think about how do we accelerate social cohesion, even with the distancing that's there. How do we adapt to some of these changing contexts? What do we do as a country, as a society, and perhaps in all of our spheres of influence to be able to have an impact? And I want to close perhaps with some more personal reflections. I think the one is exactly to your point. We're in an environment where panic starts to create, I think, an environment that we must try and avoid significantly. So don't spread fake news. I mean, verify the information that you're getting. I think the second one is try and assist in terms of our collective education with each other. We're all going through this together as a society. And then thirdly, and perhaps most importantly, I think we've got to think long and hard in terms of how do we support businesses, how do we support colleagues, how do we work together in terms of a period of heightened uncertainty, but also perhaps an opportunity for us to have a deeper sense of empathy, awareness, and understanding of each other. Thank you for your time, and look forward to interacting again soon. Thank you.
Thanks, Abdullah.